Just recently, I talked to you about on-balance volume as one of the oscillators when taking a look at stocks. So today we're going to go a little bit more deeply into on-balance volume, and I'm going to apply it to Facebook. So first of all, what is on-balance volume? An on-balance volume is the first and still the most popular indicator to measure positive and negative volume flows. The concept behind the indicator is that volume always precedes price. On-balance volume is calculated simply by adding a period's volume when the close is up and subtracts it when the period's volume closes down. A cumulative total of the volume additions and subtractions creates the on-balance volume line. This line can then be compared with the chart of the underlying security to look for divergences or confirmation between the on-balance volume and the price. If a stock continues to rise while the on-balance volume levels off or even declines, a divergence is occurring and a reversal in the stock price is very likely. But conversely, if a stock makes a new reaction low that is not confirmed by the on-balance volume line, then the security will most likely soon rise. So before we get into the chart on Facebook, let's just do a little bit of fundamental analysis on Facebook itself. So let's take a look. If you've been paying attention to the tech sector lately, you know that several of the high-tech companies have been hit hard, particularly Facebook. Facebook came out with recent earnings and their projections were not acceptable to the market. And on the conference call, management stated the following. Number one, we expect our revenue growth rates to decline by high single-digit percentages from prior quarters sequentially in both the third and fourth quarter. Number two, they stated, we anticipate that total expense growth will exceed revenue growth in 2019. And then lastly, number three, they stated our operating margins will tend towards the mid-30s on a percentage basis. So in summary, Facebook expects revenue growth to slow, expenses to rise, and profitability to decline. And that sounds like a perfect storm. Facebook trades at 33 times 2017 GAAP EPS of about $5.39 and 24 times forward earnings based on a consensus estimate of about $7.08 in 2018 earnings per share. So does a company growing revenues at 20 to 30% with 30% margins really deserve to trade at only 24 times earnings? I don't really think so. And I believe that the short and long-term picture is even better than the share price would seem to suggest. So first, a couple of charts. First, this quick chart here showing the daily active users in basically the entire world. The very bottom, that is US and Canada, and that growth pretty much has topped out and matured. But growth there in Europe seems to be slightly increasing for the most part, with a slight drop in the last second quarter 2018. But for the Asia Pacific and the rest of the world, there seems to be relatively decent growth. And then this quick chart here, which is the earnings growth on a per share basis, increasing from way back there in the second quarter of 2016 of 78 cents to the second quarter of 2018 of $1.74. So not great growth from the first quarter of 2018, but when you take a look at the overall trend, it seems to be relatively positive. So now let me go to a couple of reasons where I think that maybe the market is missing something. And this picture here is an artist rendering of an office building in North Austin, and it's called Domain 12, and it's a 17-story office building under construction in North Austin. And it was recently rumored that Facebook has recently leased the entire building, which contains about 320,000 square feet, which is huge. So their growth here in the U.S. continues to be fairly robust. And then there's also reports that in India, per a recent article, Google officials were alarmed to learn that Facebook could earn close to $980 million in ad revenues in India in 2018. And Google, which entered India many years ago, only reached the 1 billion mark very recently in 2017, whereas Facebook has reached near that mark much, much more quickly. So I think that there is strong growth not only in the US, but in other world regions. Now let's go straight to the charts. And this is the 6-month daily chart on Facebook, and the symbol is FB. And this here is the last day of trading right before the earnings announcement. And this is the first day of trading following the earnings announcement. And so the stock gapped down from about $218 a share to below $180 a share. And then we had a dead cat bounce here up to this point, and then the stock trailed off through here. Now, in about this area here is where the governmental hearings were for Facebook, Twitter, and Google. And Google didn't show up, and Facebook and Twitter didn't do all that well. So along with the decline in the NASDAQ, these stocks sold off, and Facebook sold off quite heavily down here to $160 per share. So in my opinion, that may be a little bit overdone. But let's go through here. The MACD shows somewhat what has happened in the market. We are increasing slightly higher lows, at least in this. We don't have an actual bottom yet in that fast line, but I think it's going to bottom here soon. And then the MACD shows, or the histogram shows, that things are not as negative as they had been way back here, so perhaps a little bit of improvement there. But now let's close in on the on balance volume, and to me that is not showing anything really unusual given the daily trading. But this is not my point of issue. And so let's go to the weekly chart to see what that is indicating. So this chart here is the 2-year weekly chart on Facebook, and going back here to late 2016, we had a bit of a correction at this point, but subsequent to that, we had a pretty good steady move all the way up until the little bit of correction that we had here in early 2018 through the February, March time frame, and then in the April time frame it started moving on up fairly well. Then we had the last day of trading before the earnings announcement. Of course, the earnings announcement and the gap down, and then the trend down here in this past week down to just above 160. So we closed at 163.04. But you can see here the trend and then the volatility that occurred here early 2018, and then the earnings announcement. But let's go take a look at the on balance volume. And it does show that correction here in late 2016 with the subsequent rise all the way up through here, very decent. And then we had the correction here in early 2018, but not much has been going on with regard to the earnings announcement. I do want to see how this shows up here in the next week or so, but it doesn't look too negative in my opinion. So I think things may be able to continue. And even if it does have a bit of a dip here, in my opinion, I think things are a little bit overblown on the downside. So keep watching on balance volume. It can give you a heads up when there is a overreaction either on the upside or the downside of a particular stock, and it might help you with regard to your investing. Now, I'm not necessarily suggesting that you buy Facebook. I just wanted to use that as an example here, something that I am watching. So for today, that's ChewDog Charts. Thank you.